Welcome to the Property Code. I am your host, Nick. Today, we explore whether buying rental property is a wise investment and how you can build lasting wealth through real estate. Our lesson unfolds as a story, guiding you step by step. Marcus was 32 and had worked in technology for nearly a decade. He had saved a modest sum and wondered if his hard-earned money could do more than sit in a savings account. One afternoon, he visited a friend who owned a small rental home. As he toured the property, a charming bungalow with a bright living room and a tidy yard, he realized this house was more than a place to live. It was a machine for creating wealth. That evening, Marcus researched how rental investments work. He learned that every month the tenant's rent payment covered the mortgage, taxes, insurance, and maintenance, with a surplus left over. He saw how paying down the loan built equity and how market appreciation increased the home's value over time. He decided to try it himself. His first step was to find a market where rents were rising faster than home prices. He studied local job growth, population trends, and vacancy rates. He discovered a mid-sized city with expanding technology firms and university enrollment climbing. There, he found a 3-bedroom house priced well below comparable rents. He secured financing with a 10% down payment and locked in a fixed mortgage rate. When Marcus closed, he listed the house for rent. Within weeks, a qualified tenant moved in and began paying rent that exceeded his monthly mortgage payment by a small margin. That positive cash flow covered his living expenses and gave him a taste of financial freedom. Next, he built a reserve equal to 3 months of ownership costs. This fund protected him against vacancies or unexpected repairs. When the air conditioner failed one summer, he paid the repair without stress, then replenished his reserve over the next 2 months. With his first property stable, Marcus turned to improving its value. He invested in modest upgrades, fresh paint, new fixtures, and energy-efficient lighting. These enhancements allowed him to raise the rent slightly and attract higher-quality tenants. Each improvement increased the home's market value, turning his sweat into equity. Marcus then applied the BRRR strategy: buy, rehab, rent, refinance, repeat. After a year of stable tenancy and documented improvements, he refinanced the property based on its new appraised value. He withdrew the equity he had created and used that capital for a down payment on a second rental home in another neighborhood. He repeated the same process, establishing reserve funds, making improvements, and refinancing. Over 5 years, Marcus expanded his portfolio to 4 properties. His monthly passive income covered his mortgage, and the equity he had recycled financed each new purchase. He diversified across neighborhoods to reduce risk and consulted a tax advisor to leverage depreciation and interest deductions. Each year, his taxable income fell, while his net worth climbed. By year 10, Marcus owned 8 rental homes. His annual cash flow supported his lifestyle and funded new investments in small multifamily buildings. These larger properties offered economies of scale, lower cost per unit, and higher total income. He formed a small team, a property manager, a reliable contractor, and an accountant specializing in real estate. Marcus's journey teaches 4 key lessons. First, start with thorough market research to find areas with rent growth and strong demand. Second, maintain cash reserves to weather vacancies and repairs. Third, add value through targeted improvements, then use refinancing to unlock equity. Fourth, build a professional support network to manage properties and optimize taxes. Owning rental property offers unique advantages: predictable cash flow, leverage to amplify returns, tax benefits such as depreciation, and a hedge against inflation. For disciplined investors who plan carefully and reinvest their earnings, real estate can become a powerful engine of wealth creation. Your action plan begins now. Research your local market or a promising out-of-state market. Calculate potential cash flow and returns using conservative estimates. Arrange financing with at least 10% down or explore creative lending options. Establish your reserve account. Make improvements that increase rent and value. Then refinance and repeat. Thank you for joining the Property Code. If you are ready to convert your savings into a wealth machine, subscribe and share this lesson. Until next time, stay focused, stay patient, and let real estate work for you.